Hi everyone, my name is Ivy Liu and I manage liquidity solutions at a company called nanopay. We're headquartered in Toronto, Canada, and I'm happy to have the opportunity to walk you through a bit of our company and a bit of our product to everyone over in Mexico and Latam. So first of all, who is nanopay? What do we do? We are a payments technology company based out of Toronto, Canada. We're privately funded with our Series A funding, originally led by Goldman Sachs Merchant Banking Division. Our technology is what sets us apart. We acquired our original technology from the Royal Canadian Mint to digitize assets. We also employ a hybrid blockchain model, which is centralized blockchain technology. Let's talk a little bit more of our tech. So most of the times you hear of blockchain, people get scared or they think of DLT, distributed ledger. That's actually not what we have. We use blockchain to give us that immutable, tamper-proof, secure ledger to track and move money and assets, but using what most banks and businesses are familiar with, a centralized ledger that gives you centralized authority and control. So we don't need what you often hear of consensus mechanisms that decentralized ledgers typically need. The ledger you hold with our tech is private, not public, and not shared with anyone else. And also we don't deal with any cryptocurrencies. We digitize fiat currencies like Mexican pesos or Canadian dollars or assets like securities. So for those of you familiar with blockchain or more often DLT, because of this, we don't have that scalability issue you often hear of. Typical DLT processes approximately up to 1,500 TPS, and we can process over 50,000. So what problem are we trying to solve with our tech? Legacy banking. Well, not quite, but legacy banking is the cause of many problems that we're trying to solve. And when we say legacy banking, we're talking about batch processing, clearing windows, end-of-day processes. These constraints are what results in high costs for moving money around. Not knowing if transactions have settled, rejected transactions don't show up for days sometimes, or until days after. And when you get rejected error messages, you can't even tell what they actually mean. So half finance folks need to pick up the phone, call the bank, figure out what the issue is. Now, at this day and age, we're still manually reconciling tons of transactions and don't really have the visibility into what's happening. Ultimately, for large businesses, an even bigger problem occurs that most probably aren't even thinking of. You're actually trapping your capital with all these buffers in all your accounts. And it's because that's what you're used to doing. A part of it is because money going in and out of accounts aren't in real time, and you never really know how much you have at this exact moment. Oops, there we go. The amount of trapped capital from so-called legacy systems is actually estimated to be $1.7 trillion. That's the equivalent of the GDP of Canada. So that brings us to the product that we're trying to talk to you about today, called Liquid. It's fluid, flexible, and adaptable. A product that as a bank, you can white label and integrate it into your existing banking software so it helps solve some of these problems. Or it could be a solution simply that the bank can use themselves to manage cash and liquidity across their subsidiaries. Now for what is Liquid? It's a real-time cash and liquidity management product. For those of you familiar with virtual accounts, it is a virtual account management platform, otherwise known as VAM. There's actually two different versions of Liquid, a Liquid Lite solution and our core product, which is called a Liquid Ledger. Let's first talk about Liquid Lite. So with Liquid Lite, it is a virtual account management platform. It helps your clients build the ideal account hierarchy, which connects into one or few physical bank accounts. It allows the business to open, modify, or delete virtual accounts in an instance. And with virtual accounts, you can choose to mirror the virtual accounts to match the accounting ledger for easier or straight-through reconciliation. So essentially, you can have a virtual account for each receivables, each departmental expense, etc. The sky's the limit. Now, this allows you to pool money into one bank account or fewer bank accounts, so you don't need to pay all the fees associated with opening and maintaining the handful or hundreds of bank accounts needed, not to mention saves you tons of time going through paperwork to do that each time. Secondly, it helps with reconciliation. It becomes easy and automated because you can now easily segregate your cash to match your ledger, your accounting ledger, and you can export from the platform directly into your accounting software, enabling straight-through processing. Then you get also instant visibility of your cash position in its entirety across all legal entities, countries, and currencies. So we talked about virtual accounts for perhaps SMEs, which are small to medium-sized enterprises. Now they can create as many virtual accounts needed to mirror their accounting ledgers, and they can manage different payables like expenses, payrolls, or receivables, even broken down by each payer. Here, however, is a typical hierarchy structure for potentially a larger corporate, operating in multiple countries and multiple currencies. As you can see in this example, you have a parent account at the top, which in this case is Acme Inc., which aggregates all the totals across the virtual ecosystem. You can then break it down by regions or jurisdictions like Acme Asia, Acme Latam, Acme North America, then further break it down by the individual entity or subsidiaries, like in this case, Acme 04, Acme 14, Acme 15, can go down to location, currencies, etc., and you can scale a lot further down, but obviously the screen is not large enough to fit that massive account hierarchy structure. In this case also, what I wanted to show is you can also split up by different assets. Now we are working with a large investment bank right now to digitize their securities assets as well, and you can group the assets that way accordingly. So you can have your securities and your cash, and then aggregate it as a total asset at the top. Now with Liquid Ledger, it's also virtual account management, but for these larger companies or corporates, they have even more benefits, such as the ability to transact real-time intercompany transactions. Our virtual ledger enables pooling of funds, multi-currency netting, immediate cash consolidation, or sweeping across all the virtual accounts to manage the cash flow effectively and efficiently. Now, for those of you who are familiar with in-house bank solutions, this is essentially what that is, but something that the bank could offer to their corporate clients. Now, with the Liquid Ledger, again, from a cost savings perspective, you not only save on the opening and maintenance of physical accounts as a corporate, you also save on those expensive transaction fees like wires. Not only are they costly, they're time consuming as well. It's not instant, and it takes time to go through the rails. You also get real-time intercompany transactions or real-time intercompany flows. For large corporates, this amounts to 30% of total cash flows. Why should an intercompany payment be sent through payment rails when they're costly and time-consuming? Because transactions are moving in real time, you don't need to manually reconcile. Transactions happen atomically, and you don't need to wait for batch files to process or wait for even days to clear. With that, you get immediate visibility into cash positions across your entire virtual ecosystem. Lastly, you get to free up some of that trapped capital. Now you're pooling money across the accounts and can set automated liquidity thresholds to pull money in and out as you see fit, optimizing liquidity instead of trapping buffers across all your physical accounts. Now, because we only have 15 minutes, I'm going to show you a quick demo, which really only shows two particular features, and it gives you a snippet into our platform. Again, this is a white label solution, typically that is sold to banks. So it would be connecting directly into a bank's client's portal. So their client could log into your portal as they do today, and then be able to go into a dropdown, for example, and open their virtual account ecosystem to manage their virtual accounts in there. Now, here, what this is essentially the Liquid dashboard. So with the built-in dashboard that you see here, on the left-hand side, you can see breakdowns of your virtual accounts in both the local and the home currencies. You'll see a total consolidated home currency amount at the top left-hand corner there, which in this case is in USD. On the right, you'll see liquidity, your liquidity positions. And if you would want to configure liquidity thresholds, you'll see bars of low and upper and lower watermarks to define those liquidity thresholds. And then you can get alerts and notifications as those amounts reach those thresholds. You'll see a currency exposure pie chart here that shows you the breakdown of different currencies, and then also cash in, cash out of your virtual ecosystem. What you're seeing here is another feature which we call the virtual account hierarchy tree. Now that left-hand box is a mini map to help you pan across your entire tree so you can see the whole structure, because it can get quite large. You can create different aggregate accounts to help you organize cash flows. Now you can also easily search and find your virtual account. There's a search feature, or you can do a drop down here where you select the virtual account in question. And as you select it, it pinpoints exactly the virtual account. It's in Hong Kong dollars in this case, and it tells you the total value in that virtual account. You'll also see some of the virtual accounts have green circles, which denote virtual currencies in there, rather than the aggregates, which are just the gray bars at the left-hand side. So we have over 300 microservices in the platform. What it means is that these are features that you can choose to either disable or enable, or even use APIs to get the benefits of them. And some key ones worth noting are a couple that I've noted here. First being the instant alert notifications that you can set up through either SMS or email. And you can set up these alerts either for pre-configured liquidity thresholds or certain milestones, or essentially whatever is important to you. You can configure alerts to receive notification of that. With the built-in dashboard that you saw earlier, it gives you visibility into what you want to see. The report query tool allows you to export reports and gives you the capability to build reports with the fields that are meaningful to you. And these reports can then be exported into a variety of formats to help you enable straight-through processing. Now, my favorite feature by far is our rules planner and rules engine, because it's such a powerful tool that allows you to configure things like regulatory requirements. Giving you one example, for Reg W restrictions or restrictions where entities cannot transact with one another, you can configure them into the platform as laws, and it would disable all the transactions that occur between those two entities. Loan management is another pretty cool and interesting feature that we have. It allows you to automate interest calculation, repayment, and track the overall loan management life cycle for your intercompany loans. Now, normally this is done through a standalone software that corporates would use. So here it's completely built into the platform for them to manage. UAM permissioning stands for User Authorization Management, or again, it's otherwise permissioning, and allows an administrator to create different role templates and different account templates to control what each user can access and view and edit. So a global treasurer may have access to all the accounts and can see and edit many things, whereas a cash manager that is only entitled to one particular account potentially can only view and not have edit access to a list of capabilities. So all of that is self-service, and they're able to, the administrator can configure that in the platform. There is no better time to invest in a product like Liquid, especially in the times of crises like now, where it highlights the need for effective cash management. Now, whether it's using the virtual account hierarchy for better cash management, or using the virtual ledger management for liquidity management, or if it's for banks, for you to white label to your corporate clients, or for you to use themselves, there's no better time than now. Thanks everyone for taking the time to listen to me speak about nanopay and our product Liquid. If you're curious to know more, please don't hesitate to reach out to me. I can be reached at ivy@nanopay.net. That's spelled IVY, at nanopay, spelled NANOPAY.net. Thanks and stay safe, everyone. Have a great day. Bye.